Let's go live on Facebook. All right. Yes, we are live.
We're live.
Morning, everyone. We have a Trevor in the house. We'll just give you a brief introduction, and then we'll give him the stage. So Trevor, started as 45 years of experience in management. He used to manage the iFLY for 45 years, and then he has a thing for real estate where he started his journey from scratch. He started as passive investor in close to 20 properties, and then move his way up to where he is a big, like at least a known name, I would say, in the industry. Recently, he joined Massive Capital, so that is also a good, very, very good thing. And we'll shortly get started. Trevor, if you can introduce yourself and let's get started.
Yeah, so my name's Trevor. I live in Austin, Texas right now. I'm originally from Niagara Falls, Canada. And as you mentioned, I started in the attractions business at the very young age of 13. I worked for Ripley's, believe it or not. Then I did 18, I worked for them for 5 years. Then I did 18 years with Guinness World of Records. I wanted to open Guinness in the United States. And so I tried to raise the money to open one in Orlando, Florida. But oddly enough, Ripley's bought the rights out and wouldn't give me a franchise for Orlando. So oddly enough, I opened a year-round haunted house. And then I went to iFLY Indoor Skydiving. I was recruited by a headhunter. And while I was always interested in real estate, at our very first team meeting, the owner gave everybody a copy of Rich Dad, Poor Dad. And sadly, I read the book, was hugely touched, and did nothing. What a lot of people do, right? I didn't do single family because I was afraid of toilets and tenants and trash. And then I read his book and I got a little bit more, but I was so busy just doing my job. I had a very busy job, very demanding job. And I put passive investing on the back burner. And what a huge mistake. I mean, I should have started the second I read that book. The saying, don't wait to buy real estate and wait, is true. But once I joined and started doing commercial real estate, as you said, I got very active very quickly, passively invested in 20 syndications, and now I'm a general partner on my third syndication.
Got it. So let's talk about the mission that you have to help people. So like a little bit about this podcast is like when I was going through my journey, I think that's where, the idea came for the podcast is I noticed that everybody has their own journey that they go through, right? And the bottom line is educating people about financial freedom, why it is important, especially in this, arena, that financial independence is something that you want to achieve as soon as possible so that you can do something which you like and, make that transition. And the goal is to, through these interviews, we want to spread this word and make some more awareness that, okay, if they can do it, I can do it too, kind of a thing. So just a little bit about your journey from your W-2 to being a financially independent. Just walk us through the mindset and a little bit about that journey, that what made you change that?
Yeah, so it's very interesting. So as I mentioned earlier, for single family and investing, I was afraid of toilets, tenants, and trash. The same thing everybody's afraid of. I used to say, I get ripped off every time I have something fixed at my house. Why do I want to make that a job and do it? So I was always intimidated by that. I wish I hadn't been, but I always was. And then iFLY got bought out by a private equity. So then my next excuse was no time, no money. And even though I had money and I could have done it, I did what everyone else did, right? I put it in the stock market. I had a 401k at work. And I didn't get one till quite late at work. So it's not like I had a lot massing there, but I didn't do it. And then I went to a seminar, and first I went to a couple of seminars that you shouldn't do, like give us 50,000 on a credit card and we'll tell you how to buy an office building with no money down with your credit card. Try to find something believable. So I went to a seminar and they talked about syndication of multifamily business, and the light bulb, I don't know why took me forever to have the light bulb turn on. And I went, wait a minute, I understand this business model. So you give your money to experienced people. Experienced people combine your money with others' money and bank money. You buy an actual real business. You're buying a business. A lot of people don't think of that. We're buying a business. We're buying a multifamily business. That business is backed by a hard asset, real buildings, real people working there. You put some capital into the business to make it better. You put some expertise into the operations to make it better. And then you improve the value of the business. You run it for a while and then you resell it. And I don't know why, but the light bulb just went on, because in my career, I've done that over and over again with businesses. I helped a lot of businesses by coming in and giving expertise and showing them what to do and how to grow it. With iFLY, we took over 3 franchise locations. And in the commercial world, we called it EBITDA, which is earnings before depreciation, interest, and taxes. They called it NOI. And I went, wait a minute, this is the same thing. And you sell for a multiple of EBITDA, you sell for a multiple of NOI. And all of a sudden, just boom, the light bulb came on. And I went, this is way more simple than I thought it is. Now, clearly, you have to pick the right operator, the right deal. You have to be educated. And that's when I started my mission, to help 1,000 people reach financial independence. Originally, I was thinking just of me, and my original goal was 100. I thought if I had 100 investors, I could just keep getting money from them and I would be self-sustaining and be able to do my own deals. And then I thought, well, wait a minute, way bigger than that. And so my goal was, if I can reach 1,000 people and 1,000 people make the decision to passively invest in real estate to start their journey, I feel very much once you make your first deal and you understand and you get past that initial fear that I'm going to help change the world. And again, 1,000 people is nothing in the scheme of the world, but I hope the people I touch will also take the same goal. And so I've just started being so active in just getting the word out there, being on other people's podcasts. And I'll also say I'm a big Grant Cardone fan. And so the end of 2020, I said, how am I going to step my career up? And he talked about omnipresent, talked about setting big goals. So of course I 10x'd my 100 to 1,000. And then somebody said, hey, we need to change that number to 1 million now. I've joined Massive Capital. That's a pretty big number, but the goal is just to educate people and then help them feel comfortable. And it's very important. Once you get educated, it's much easier to get comfortable.
Got it. So I will just, tell you a little bit of a funny story that I had, right? So similar to what you were mentioning, like back in the days when I started my healthcare career, we used to buy rundown nursing homes, community hospitals. So my employer had a big money. So every 3 months, like a quarterly meeting, he will come with a folder saying, oh, I just bought this. Now you guys figured it out. So the first one we did was a, kind of rundown assisted living upstate New York. Didn't know what to do. And it was there was a nurse job to flip that place around and make it, work. First one took us like almost 1.5 years to flip it. The second one was 1 year. And then we became so good, like it was like 6 to 8 months, we knock it out and we move on. And in 2018, same thing, somebody introduced me to syndication and value add, right? So when we talk about value add, and when I was learning, I was like, wait a minute, I've been doing it already, like value add. It's just a different industry. Like that's what we've been doing. Like we used to buy a rundown nursing home. We so I'm a numbers guy. So my job was to go in, look at the numbers and fix the numbers. And nurse's job was to make sure the compliance part was there if they were lagging or there were some tags from the state and things like that. She will work on that. I will purely work on revenue side. How can I boost the revenue? How can I decrease the expense? How can we make it more efficient? How can we improve the quality of service? How can we improve the occupancy, NOI, revenue per bed, all those things. I've been doing it, you know. So that was my light bulb. Like
Yeah.
for multifamily syndication, I was like, okay, like, this is what I've been doing already. It's just like
Yeah.
from outside, it just looks so complex to even deal with.
Yeah, and
But
it's very interesting that when you think about it, also you're making the world a better place, right? So we're buying rundown apartment complexes that maybe not well managed or safe, and we're making them nicer places to live and safe. Clearly, in your healthcare industry, I know when my nana and papa years ago got put in the home, I was traumatized. It wasn't that nice, and it was even nice, but it wasn't that nice. And to be able to do that and not only provide a place for people to make money, but to make the world a better place, right? To take down a rundown facility, turn it into a nice facility. And then ultimately, I know you're still in the business to make money, but your end goal is to make a better place for the people to live in. And then once you do that, you can charge more to live in there. And people don't mind paying for quality. And as long as you don't outprice yourself, and it's the same thing in multifamily, right? If you get a property, you can't double the rent because the market just won't survive, right? So you're getting that 10-20%. The market can pay it to get a nicer property. And so again, once I figured out that it was a business, it totally changed what I wanted to do. And me, obviously, I got in it pretty quickly. I'm not only invested in multifamily, but it's the asset class that I know the most about and that I'm actively pursuing.
understand. So especially when we are talking about anybody's journey, right? It cannot be completed without failures or mistakes.
Yeah.
So let's talk about that.
Yeah. So I would say, first of all, my first failures were, I was so eager to make my first investment. I just made it. And I didn't really do some due diligence on the sponsor themselves. And it turned out like that it's not like they were dishonest or anything. They just weren't high quality. I didn't quite understand some of the underwriting. Like, again, they said, oh, we're going to put the rents up to this. And then after I got a little more educated, I went, okay, simple math. Rent is basically 3 times or you need to make 3 times the rent. So if the rent's $1,000, you need to make $3,000 a month. And they said they were going to make rent $1,000 a month, but the people only made $2,500 a month in that neighborhood. And so some of the basic facts that I know now that I talk a lot about, just to kind of double check that they're going to do it. And then I think that, and then my best deal to date, I spent a year looking at the sponsor, and I actually met with them at a they were a host of a pot meetup or whatever. And then I started following them, and then they started sending me their deals. And I said, well, I'm not quite ready to invest with you, but would you mind sending me just the reports from those deals? I promise I won't share them with anybody. And I just started to watch, how do you tell what's happening? How do you, what am I seeing in your reports? And I was looking for honesty, right? Like, hey, we're a little bit behind on this budget. We're a little bit ahead on this, and this is why, and what we've done. And to date, it's been my best investment. They 3x'd my money in 20 months. I instantly returned and invested with them. The second that deal came through, they had another one, and it's a good thing. And I would say one of the bigger lessons I learned is how hard it is to switch to the active side. A lot of people, and that's why I say to people, a lot of people are saying, oh, I can't wait to get out of my job. I can't wait to do it full time. And I say, actually, you should wait as long as you can, because if you keep reinvesting your money, the compounding power is amazing. So I always tell people, think of your younger self. And I know $100,000 is a lot of money, but I use that number because it's easy. So if you double it in 5 years, it's 200. Double it in 5 years, it's 400. Double it in 5 years, it's 800. Double it in 5 years, it's 1.6 million. Double it in 5 years, it's 3.2 million. So at the beginning, try to reinvest so you get that compound effect. And if you could imagine, if my 25 or 30-year-old self put that $100,000 in, and now I'm in my 60s, I would have been a multimillionaire, 20 years ago almost. And so it's very important for people to understand the power that your money has when it's combined in this vehicle. And if you reinvest the profits versus try to live off of them. Now, I know there reaches a point where everybody wants to get out of the, and you will reach that point. And, but just, and there's a lot of even, Rich Dad, Poor Dad in his book talk about that, right? That, he talks about when he finally bought his Porsche, he did an investment enough to pay for it. He didn't take it out of his regular income.
Yeah. No, that is one book I would highly recommend to read anyone and everyone, and I think that was also a turning point from my life. That was the first investment book I read. And after that, of course, I read like so many, but that book is still so powerful and basic learning, like you have to know the basics of learning, and the mindset. It's all about, having that mindset. It's like nobody controls at anything, you can be millionaire. Are you having a employee mindset, employer mindset? What are things that you have to give up in order to make that transition? And the quadrant that he talks about, definitely something that to be learned. So
yes.
And one more thing I'll just add is I'm very good friend with Sanjay. So I often talk to Sanjay from Massive Capital. So I would definitely add that is if I'm trying to be, part of something and I want to know what they're doing, right? So that's where I came across Massive Capital and I was like, okay, send me your, deals, what you have, let me review it. And then the two deals that we were trying to get part of it, and then it got funded last minute. But yeah, my investor likes it, I like it, numbers are good. So for that reason, I will definitely recommend Massive Capital, being on.
Your sound just went out.
Can you
There,
hear me?
you're back now. Okay.
Okay. So the in a short sell is everybody, so there is a joke around real estate community is everybody's number is conservative numbers, right? But there is no definition of conservative numbers. Nobody I have yet to see that is going to say, oh, our numbers are not conservative numbers, right?
Yeah.
So the definition is different, but at the same time, you have to be logical and just having that sense of being upfront, right? The one more thing people don't talk about is, a management fees and hidden fees that people charges, especially being on an active side, that they don't even mention to their investors.
Yeah. And you need to disclose all of those. And, I also want to talk that a lot of people think there are people who are greedy and take fees and put nothing in the deal. So don't get me wrong, and run away from those people, right? But there is a reason why people get acquisition fees. And my first deal as a GP, we were buying a deal. I joined another group of people and we lost $350,000 of hard money. 75 of that was mine, which is really hard to have that happen to you. So there are real costs in putting a deal together, and you want your sponsors to be able to win, but you want to make sure that you win first. So I like deals that offer a preferred return, right? Where investors get paid first. I don't mind, there are deals that have more of a complicated waterfall at the end, where if the deal's super successful, the sponsor makes more money. For me, I'm very happy. I'm in a new build storage deal. And when they double my money, it goes to 50-50 split. And I'm like, double my money, please. Who's not happy if your money's doubled in a, now, if they take 20 years to double my money, I'm not very happy. But you know, the concept is that they're trying to double your money early and then the split changes. And I'm okay with that. Absolutely okay with that. You want to, if your sponsor's not making any money, they're not going to pay attention to your deal. And so it's very important, but it's also very important to make sure that you invest with people that have skin in the game.
Yeah.
You know, so just for a rough example, if you're getting $200,000 in fees and you're only putting $100,000 in the deal, you're already making money. But if you're getting 200,000 and you're putting 300,000 in the deal, you've got some real money invested alongside of your investors. And that's a very important part of it, right? You want to make sure that the sponsor has cash involvement in the deal. You also want to make sure that the sponsor has experience in the marketplace. You know, a lot of these syndicator gurus teach you, you know, buy a multifamily anywhere, hire a property management company, go sit on the beach and drink pina coladas and watch the money roll in. I'm here to tell you today that's a lie. It's hard work. We're running businesses. Now, does it mean every deal's complicated and you get phone calls day and night? No, it doesn't. But as an operator, you want people that are putting time and energy into your deal and understand their market. It's very important because you don't want them learning lessons on your dime, as it's said. You want them to learn lessons. And to be honest, that's why I passively invest in other asset classes. I don't know much about storage, so I said, let me invest in it and start to learn. And believe me, when my money's there, I pay attention. But I don't know enough to put your money there or somebody else's money there. And I will partner with somebody eventually who's an expert in it. And through Massive, they do have some storage, they have some industrial, they have some land. So the nice thing is the partners have a great mix of experience, and they have everything from C value add to A class properties. So you want to make sure that who you're giving your money to has experience in what you're investing in.
And is, of course, the fee is justified, but like, you know, it has to be like kind of close to industry standards, right?
Yes.
If the industry standard is 2% management fee, you can't be coming up with 5%, you know, those kind of things. Like at the end, as an investor, you should be rewarding people that are making money for you. Like it's betting on horses, right?
Yeah.
So the horse needs to be fed well and rested, and you know, things like that. Like, you know, otherwise, if your horse doesn't perform, you lose your money. So it's the same thing, you know, like you have to have trust, faith, and your own due diligence, where you know, okay, these they know the game, what they are doing. Like in every deal, it can be easy, it can be hard, and like, you know, like when you start, things can be all right, but you know, it takes like 2 days to change the weather.
Yeah, no, and you know, I talked about, I like pref payments, but I also like reasonableness. So for example, a normal pref payment is anywhere from, let's say, 6 to 8%.
Yes.
There was a deal that I had a friend was raising money for, and they kept saying, Trevor, the pref's 12. And I said, I've looked at this, they're never going to be able to pay 12 until sale. So the GP team's never going to make any money. And if the deal gets hard or they get distracted, it's very difficult if you're not making any money. And so I want them to make money. I want them to be motivated. I want them to pay attention to the deal, because even the best of us get discouraged, right? And if you keep trying to turn a deal around and you know, you have no hope that your payday comes for 4 or 5 more years. Now, yes, there are deals that don't pay out till the end. You know, I understand. I'm in a new build. New builds don't pay anything until it's built and occupied, right? It's you know, that's a different investment. There's different ways to look at how your money comes. And you need to make sure as an investor that you're understanding that when your money's going to come. And they often explain it. But if you look at some of the performers and then you'll see a 7 pref, you'll see many deals don't catch up to that pref till close to year 2. And it's just the way the numbers work. But make sure they're being honest with you, that we're going to get caught up. And all that means is, as a sponsor, I don't get paid until you get caught up. And I like that, but I want to get caught up because I want to see the sponsor get paid too, because that's a win-win, right?
Sure.
So I get paid first. I want them to get caught up and I want them to get paid so that they stay interested and motivated in the deal.
Mhm. Got it. So another thing, like, and we just want to ask everybody is, there's so many investment vehicles, right? Real estate, stocks, bonds, notes. There can be n number of investment vehicles. So, what are the good things you like about real estate, and what are the bad things you like about real estate, or some dislikes that you have?
Yeah, so I definitely like real estate, especially on the multifamily side. There's two things that I mean, everybody needs a place to live. There's a housing crisis in America. We need more houses. We need more places for people to live. We need better places for people to live. So I really like investing in multifamily. I really enjoy that space. I did make a passive investment in retail. And retail's taken a big hit. My first passive investment is the retail strip center in Plano, Texas, and we closed March 15th, 2020. Want to talk about great timing. Now, they've still managed to pay 5% cash on cash. So I'm very pleased with that. They managed to renegotiate the leases to triple net, which is very important on resale value. Institutional buyers want to buy retail that's on a triple net. And now all that really means is the tenants take all the risk for any improvements to the property. So it's very important. I also went into medical during COVID, because I saw all this crisis. So one of those emergency care places in a Mesquite just outside of Dallas, because I wanted to get into that space. And again, it was a slightly different investment. There's no upside to it. It's just a straight percentage. But for my retirement money, I was quite happy with that because there was no depreciation in the deal the way it was structured, and there's no upside. But for my retirement money, I'm happy. So the way I look at it, let's say we're playing a baseball game. I want to hit lots of doubles, couple of singles, one triple, and then the deal where they tripled my money is the grand slam. So you want to make sure that you're spread out a little bit. Don't put all of your eggs in deep value multifamily real estate. So I have deep value all the way to A+ new build, trying to spread my risk. I stay in landlord friendly states. So 90% of my investments are in Texas. I have one in Arizona, one in South Carolina, and one in North Carolina. Again, all landlord pro-business friendly states with tremendous growth, right? Everybody's moving to Texas, Arizona, and the Carolinas. It's just, those markets are on fire. So you got to risk not overpaying, but the deals are still good deals to be had.
Let's talk about your mission. So when you started with mission, now I know it's growing from 1,000 to 10,000 to 1,000,000, right? So what are the things you have done to achieve those missions, and what are the things you're still planning to do to achieve those missions?
Yeah, so podcasts like this and talking with people and getting the word out. It's called using other people's stages. So last year I was on 52 podcasts. My message is very similar. I try to personalize it for each market in each group. I also created a YouTube channel with a lot of educational. So I recommend books. You talked about Rich Dad, Poor Dad. There's another great book by James Kamasami called Passive Investing. Every new investor should read that. And then if you're going to switch to active, every new active person should read Joe Fairless' Best Ever Real Estate Syndication book. It's a great book. I have podcasts that just talk about real estate terms. I don't learn by reading. I'm not a reader. I learn by listening. So I basically just took what people were sending me in PDFs, reorganized it, and said, okay, let's talk about these real estate terms to way to help you understand it. So I try to break it down in simpler terms. I made an interesting video. It compares passive investment to going on an airplane ride. Okay, and what the components. So as a passive investor, you're buying a ticket on a journey. Okay, so you buy a ticket, so you look at the airlines, lots of regulations in the US, so all the airlines are pretty good. You buy your ticket, and when you get there, there's somebody responsible for all the different elements. So the pilot is the asset manager. He's the person in charge. He has flight attendants that are the investor relations team. He has a ground crew that's filling the plane, bringing the food on, and that's the property management company. And as a passenger, I can do what I want while I'm on the journey. I can keep working. I can sleep. I can visit. I can read. I can do whatever. And then as you're going along in the journey, they give you updates, right? Oh, interest rates went up. We're having a little bit of turbulence, folks. This is what we've done. We bought the interest cap rate. This is where we're at. This is how we're going to get out of the deal. We're okay. These are the precautions we took. We've got extra fuel because the trip's going to take longer, whatever it is. And you arrive at, and so I try to put it in simple terms, because you never know what moment in that will be the light bulb for someone else. For me, it was buying a business. That was my haha moment. But someone else has maybe never done that or experienced that. So I want to try to give them their moment, just so that the light bulb comes on and they go, let me look into this more.
So let's talk about, the topic of the show is power of passive income and financial freedom. So what it means to you, and like how many ways, like the ways it has helped you in terms of, living your life, right? So let's talk about that.
Yeah, so it's again, it's different to everybody else, right? And so I probably might have still been working if COVID didn't happen and iFLY let me go, because I loved doing what I did. And I wasn't like, I've got to do this full time, because I was still pretty successful being able to do it. But again, I want to make sure I talk about, when you do have a sponsor, make sure somebody on the team is full time doing this. This is their business. This is their job. So it was really important to get that. But what it does is it just gives you the flexibility. And then for me, my ultimate goal is creating wealth for my family. So I have this strange plan. Everybody thinks I'm crazy. So I want to do a bunch of real estate investments. I want to start condensing them into one deal so that I own a majority of a deal. I want a 1031 exchange and become a landlord, just owning the dirt. So I want to be Walgreens, Starbucks landlord. Again, the lowest risk, therefore the lowest reward, but when you 1031 into it, you pay no tax. Then I own that and I die, and my family inherits at a step up value. So just think, again, I'm not a filthy rich guy, but you put $1 million in land and it becomes 2, and then it becomes 4 when you die. Nobody pays tax on that, and your family inherits the cash flow. So for me, that's how I'm leaving a legacy. I'm not like, let's fly around the world, let's go on cruises, let's go to the beach. I love working. And so that's not my why. My why is to be able to know that when I'm gone, everybody is taken care of. I definitely haven't set it up yet, but there'll definitely be some charitable contributions within that. And I also, when I have more control of a property, I want to have resident help services. I've got some friends that have some properties, and they are in an area where English isn't the first language, and they have English as a second language programs for the parents and the children. So it was just important to them because they were also immigrants and English wasn't their first language. And so I haven't quite found my why there yet, but I'm keep looking for it. And that was a beautiful why, right? Because they're helping those residents, be able to do it. And I think being able to help people, live the American dream is a great thing.
I think that's one thing I learned, like when I was like making my transition, is even in real estate, there's so many vehicles, like it's very hard to, comprehend everything, in a one day. But talking about like 8 pref, 10 pref, 12% pref, or even like as low as like 4% from Walgreens, right? Or
Yeah.
4 or 5%. You don't get more than that. It's CVS, Walgreens, it's like 4 or 5%. But the security is way higher, right? So it's always like if you go for security, the returns are a little bit low, but then
Yeah.
it is like almost as good as 100%. But
Yeah,
if you and again, age versus reward, right? So if you're on a younger side, you might want to have higher return and still evaluate maybe 60-70% risk side. And then as you grow, and get older, like 50s, 60s, then you want to diversify into
yeah,
something that is 80-90% secure. Even though if you have to take 2 or 3% cut, it's fine. But your return is secure, and then after that it's just all about cash flow and
yeah,
replicating that money. So one great example I would say is last year we had a deal, and there was a gentleman 531, 1031 exchange, and he wanted to dump almost $5.5 million. So it was okay, and everybody wanted, right? Who doesn't want $5.5 million in that deal? And he was an 85-year-old. He was his background was prior real estate developer. In 2008 he was wiped out, and then he built himself up and things like that. So he said, I'm 85-year-old. I don't care about depreciation because as for my age, I qualify enough for
yeah,
check all the boxes. So get me the cash flow. Like my priority is getting a cash flow of $15,000 a month. From as long as that happens, you got my money. So we structure a deal in a way that, okay, he doesn't want, to be tick structure, or he doesn't want to be part of the deal, but what he really wants is a cash flow
yeah.
starting from day one. And we just have to make sure and come up with the numbers, and everybody was happy at the end of the day. So
Yeah,
every
and
investor.
knowing what you need is important, right? When I had my W-2 job, I didn't care about cash flow. I wanted multiple of my wealth, right? I wanted to put 100,000 in a deal and turn it to 200 as quick as possible. And cash flow was almost, I don't want to say annoying, but I didn't have a place to re-put it, like just and then now that I'm doing this, I do look for some deals that have some cash flow just because I need that, right? I still got to eat and drive a car and do things. So, it's everybody has different needs, but at the end of the day, you need a mixture of all of those things, right? And you need, like I said, like my medical center is a single, but it's a single every time I get up to bat, right? That check comes in every quarter. It's just there. And then, the other deal, so you want to balance out a little bit on where you invest and what you invest and who you invest with.
All about educating yourself about different vehicles. Then you can pick and choose based on your situation and based on your scenario. It can be different every time when you are trying to reinvest, right? That okay, like I got my double, like money double in 2 years, but now I want to stabilize it, or I want to make it even quicker. There are deals, and they are not shady deals. They'll
Yeah,
literally get you double in 1 year, 1.5 year. But you have to know, not as good as them, but at least know what they are doing and how they're going to give you back.
yeah,
And once you know that, then yeah, it makes sense. Recently, we started getting into notes, like real estate notes, and I learned from my friends that are doing in 100 million, $200 million. But that is also something, you can make 30-40% easily, especially in this market where the default rate is just going higher and higher.
yeah,
So bank is ready to unload a lot of non-performing notes because they have to, and at the discount 30-40%. You can buy it off, restructure it, run for a year, and then the beauty is the same bank can buy from you again at 100%
yeah,
when the market is right. So those
yeah.
kind of
And
things.
but getting educated is important, right?
Yes,
Like
yes.
if you decided notes is something you want to invest in, you need to educate yourself. A lot of people right now are pushing the oil and gas investments. I don't understand anything. And I always say my mama said if it looks too good to be true, it probably is. That's a naive statement, but I don't have time to learn about it. So I chose not to invest in it because it wasn't part of my, like storage is part of my original plan. That's something that medical is part of my original plan. Retail was, I'm not sure if it will be again. I think retail is going to come back in a different format. And I think there's still lots of opportunities. I know we were just brainstorming before we started. The sky's the limit on creativity in real estate. You can do lots of different things and find vehicles where people can invest their money and do well, and you're providing something that the world needs.
Just identifying core competencies is a very good thing. There can be n number of things, but at the same time you don't want to get that like diverted too much.
Yeah,
So identifying that, okay, these are the list of like maybe 5 items of multifamily RV parks, that you identify, and then you just pick and choose based on your need. I think that would be the message
yeah.
from this thing. But yeah, I think it's a good talk to wind up. We are already short, but yeah, thank you so much for your
No, it's
time.
my pleasure. Thank you so much for having me.
Definitely. Let's catch up soon, and we'll talk again.
Awesome. Thank you.
Sure. Thank you.